Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that gold price is approaching $3,000 an ounce again, after hitting a new record high earlier today. The equity markets are falling again. Benchmark bond yields are in risk-aversion mode, but corporate debt yields are rising. But first, US initial jobless claims were little changed last week from the prior week, slipping slightly on seasonal factors. There are now 2.163 million people on these benefits, 4% more than at the same time last year. And American producer prices are up 3.2% in February from a year ago, slightly less than expected, and a notable fall from January. But January was an outlier. The average in 2024 was 2.5%. Egg prices in the US are now rising fast. They're up 100% in 1 year, up 42% in 2025 alone. US egg prices are rising faster than gold. And there was a US Treasury 30-year bond tender overnight, and to slightly less demand. It resulted in a median yield of 4.56%, which was less than the 4.68% at the prior equivalent event a month ago. Meanwhile, US yields for sub-investment grade corporate bonds, that's junk bonds, have jumped in the past week or so on recession fears and tariff uncertainty. Today there were more tariff threats from Trump, who can't seem to understand why others would retaliate. North of the border, riled up Canadians are now proposing to toll US trucks that go through British Columbia to service Alaska. But this won't hurt Alaska much, as most of their freight arrives by sea. However, they seem to want to make a point by withdrawing a long-standing concession. Elsewhere, supply chain and retailers are noticing significant anti-US consumer demand shifts. And staying in Canada, their residential building consent levels slipped in January, pretty much as expected after the surge in December. But they remain an impressive 29% higher than year-ago levels, largely due to multi-unit construction. Across the Pacific, Beijing has quietly moved to inject public funds worth 500 billion yuan into ailing state banks. It is a similar rescue to the 1998 Asian financial crisis, when they injected 270 billion for the same reason. And Chinese warships may have been circling Australia for geopolitical warning reasons, or they may have had other objectives as well. Yesterday, the official work report from the Chinese National Congress was released, and it includes a mention on page 17 of it now being a key task for 2025 to develop deep sea science and technology, which is a new item added this year. It's a reach, of course, but we may be seeing more Chinese vessels on our presumably valuable continental shelf. Global container freight rates fell another 7% last week to be their lowest since January 2024, but still 67% higher than pre-pandemic levels. And bulk cargo rates rose sharply last week, up 27% for the week to be a third lower than this time last year. The US Treasury 10-year yield is now at 4.27%, down 3 basis points from this time yesterday. And Wall Street is falling again, down 1.4% on the S&P 500. And the price of gold will start today at just on $2,980 an ounce, up another $48 from yesterday. That's a new all-time high. In intraday trading, it hasn't quite yet touched $3,000 but close, and probably soon. Oil prices are down $1, just over $66.50 a barrel in the US, while the international Brent price is now just under $70 a barrel. And the Kiwi dollar is now at 57.1 US cents, and down 20 basis points from yesterday. Against the Aussie, however, we're unchanged at 90.8 Australian cents. Against the euro, we're still at 52.5 euro cents. That all means our trade-weighted index starts today at just under 66.4 and down 10 basis points from yesterday. And the Bitcoin price starts today at $80,780 and down 1.7% from yesterday. Volatility over the past 24 hours has again been moderate, plus or minus 2.1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.